Hey guys, hi, hello, welcome to another episode today. And today's episode is called How to Invest in Stocks for Beginners. Now, if you guys are not beginners and you already know how to invest in stocks, I think this is not the video for you guys because this is for people who have no clue, who have no idea, who've just entered the stock market, who've just turned 18 or are going to turn 18 and they're like, you know what, I want to know how to invest in stocks. What are the different steps and procedures? This video is for them, right? So for all the people who are experts, I think you can skip this video. This is only for basic guys. But if you're skipping it, don't forget to subscribe and then skip. And all the people who are not seen this video before, please subscribe as well. It's for both, okay? I'll be a little happy. Now we're going to do a 6-step process, okay? 6-step process on how to invest in stocks for an absolute beginner, okay, who has no idea. Cool? Step 1. First step, obviously, is to open a demat account. Okay. Now, what is a demat account? It's an account where you can start trading stocks, right? There's a broker. You have to choose a broker and you have to start trading through that broker. And all your shares go to NSDL and CDSL where everything is cleared and stuff like that. Okay. So, first demat account. Now, Grow has a demat account which also has zero AMC charges. AMC is something that you have to pay every year. It's called account maintenance charges that has gone, that keeps going annually. So, Grow has a zero account maintenance charges thing and also has very low brokerage fees as well. Okay. And you can choose any other demat account as well, not necessarily Grow, but I'm just saying what Grow has because this is in the Grow channel as well. Okay. But it's up to you. But the first step is get a demat account. Okay. Get a broker, get a demat account, and you can do this as soon as you're 18. Okay. That is the first step. Now, second step, okay, like Shashank, I've finished my demat account. Now what do I do? There's so many stocks here. I don't know. There's so many different kind of financial instruments. It's kind of scary. I don't know where to start. Okay. Before you even put 1 rupee into investing, first you need to make a budget. Okay. First thing you need to do is keep a budget aside. Understand how much you're making. Okay, what is your incoming revenue that is there in your personal revenue stream? Okay, if I'm making say 50,000 a month or maybe 40,000 a month, understand how much is coming in your pocket first, and then say, okay, Shashank, out of this 50,000, maybe I can save 10% or maybe I can save 20%. Ideally, a good investor should save anywhere between 10 to 20%. Minimum 10% you have to save. Okay, if you're not saving minimum 10%, that means you're spending more than what you're supposed to be earning. Okay, either earn more or spend less. That's the only way it works. So the first thing, set aside a budget and say, Shashank, every month, okay, I don't care about the amount, but it's a percentage. Every month, 10%, 15%, 20%, I will sit and I will invest. Okay, before you even invest, this is what you need to do. Okay, now depending on that, okay, now you said, okay, I want to invest this much. Now, second thing you need to decide is after setting the investment budget aside, what is my goal? Right, what am I saving for? Right, am I saving for the next Goa trip? Or am I saving to buy a car? Or am I saving to buy a bike? Or am I saving to buy a house, which is obviously a little long term? Or am I just saving for a stable, secure future? Right? Different goals. People have different goals. Like, I want to save a particular amount so that I go for one international trip or something with my friends tomorrow. Maybe, I don't know, right? So, it is very important to first align your goals and understand why I'm investing, because that investment goal will determine your investment time period also. Okay, so if I want to go and buy a house, then I have to invest for at least 10-15 years. Or if I want to buy a very expensive car, I have to again save for 10-15 years. If I want to send my parents for a beautiful international trip and I know the budget is maybe 15 or 20 lakhs, then I have to start saving from today, and that would take maybe 10 to 15 years for me to save just to ensure that my parents go for a nice beautiful international trip. Okay, so after setting aside that 10-20%, okay, 10-20%, even if you get promoted and your salary increases or you get extra revenue, that 10-20% of that amount should be fixed. Huh? So your amount might vary, but your percentage has to be fixed. Okay, and then you decide how many years do I want to keep this. Right? Do I want to keep this until 35 or do I want to keep this just as a backup that I want to make a discipline of saving? That's also fine. Even if you don't have a goal and your goal can be just saving, that's also a good goal to have. But just don't keep removing constantly. Okay, and after that, once you understand this, once you understand that, the third thing before you even buy a particular stock, you need to know what is diversification. It's called portfolio diversification. Now you've heard this saying, don't put all eggs in one basket. Right? Unless you own the basket. Okay, don't put all eggs in one basket. Because if you put all your money in say one stock, and for God knows what reasons, something might happen, even for the best of the best stocks, right? You might buy, maybe put all your savings into Reliance and then something really goes bad with Reliance. then you can't determine your entire future on someone else. So it's always good to split. Okay, so portfolio diversification basically says that 10% that you're investing every month or 20% that you're investing every month, you invested in multiple stocks, okay, multiple good long-term stocks, so that even if one goes up, the other might go down, it'll balance your portfolio out. Because see, at the end of the day, it's your money and you should be safe, okay? Think about it from that perspective. So 3 things under setting aside budget. First thing, put a nice 10-20% budget on the side, okay, that's very important. Find out what is your goal for investment, if it's a milestone based goal or is it just simple investing goal, that's also important. And then realize that diversification is very important, okay? These are the 3 things, before you even invest, you start this, okay? Now we'll see how to invest, okay? Till now you understood the psychology, and one more very important thing in the psychology is don't go for quick short term money, okay? Quick gain. Lot of new investors in the market today are doing that. Most of them are investing in IPOs for listing gains, okay? That means they get 10,000 rupees extra, 15,000 rupees extra. They're very happy and they're like, yes. Don't think about it from that perspective, please. If you are going to be a good investor, a diligent and a smart investor, you will only win in the long term, right? Compounding interest kicks in at long term. You can invest 1,000 today, that 1,000 will grow for you, make money work for you, okay? Don't keep removing that money and just go party and enjoy. Cool? Awesome. Step 3, let's come to investing in stocks. Now, for a new beginner, okay, maybe I have no idea what stock market is, okay? So I don't even know how to find good stocks. Obvious, common sense, right? I don't know how to find good stocks. I don't know what parameters are. I don't know what ratios are. I don't know what moving averages are. Nothing. I have no idea. But it's okay, right? You don't have to be scared that, I have lack of knowledge, so I'm not going to save. That should not be the approach. Okay, there are simple things that you can do with zero knowledge in the stock market. For example, the 3 ways to invest here is, okay, you might know a little bit, so you start investing in your own stocks. You're like, no, I know this stock is good. I know that stock is good. This is a large cap stock. This is a mid cap stock. Maybe you know how to do that research. You can invest in that. No problem. These are for people who have slight knowledge in the market. But people who don't have any knowledge can go for a direct mutual fund. Who don't have time to do this research and who have no idea how to start, you can go find out mutual funds online and just start investing in those mutual funds. Okay, there is, I think on very different websites, you will see a CRISIL rating. Okay, CRISIL rating is very important to understand whether the mutual fund is good or bad. Even the mutual fund also shows you historical returns. It tells you how much it has given in the past, how much you could have grown your money. If you had done SIP, how much you would get. All the data, all the information is available. So if you have no knowledge in stocks, you can't pick your stocks, let an expert do it for you. Just put it in the mutual fund. At least you're saving, right? Instead of spending it. Okay. Now the last thing, third thing, if you again have no idea, but we all know historically in the past that Nifty and Sensex has always gone up. Okay. It's just an upward curve over a period of time. You can buy something called index funds or ETFs, okay, which replicate the index. Okay, so if Nifty goes up by 50%, your thing also will do really well. Your portfolio will do really well. So you just replicate or mirror the stock market. But if you're new to the market, 3 things you can do. 1, obviously invest in your own stocks, which you have researched. If you don't know that, don't worry. There are mutual funds that you can invest, really safe mutual funds, large cap preferred, okay, because you're a new investor. And index funds and ETFs are also a good way for new people to invest. Okay, now these are the 3 different ways. If I have no knowledge, I'm a beginner, I can invest in this. Now, assume you're a beginner who's done some research. Okay, now step number 4 is for people who invest in stocks by themselves. You're saying, Shashank, you know what? I've got little bit of understanding of the stock market. I don't want mutual funds. I've already put in mutual funds and ETF, but I want to pick my own stocks. Okay, and you're a new person. Now, what happens generally? A new person entering the stock market will always look at making money fast. Okay, stock market is not a very fast, quick money making game. Okay, you try to beat the stock market, you might get hurt in the process. Rather play the long term game. Okay, now if I'm a new guy, completely new guy, it is beneficial for you to invest in large cap companies who are so big, it's too difficult to fail for them. Like you say TCS or ITC or Reliance. Again, this is not a stock recommendation video. I'm just giving some names of big companies that are so big, it's difficult for them to fall, like Reliance and stuff like that, right? So it is wise for new investors to invest in large cap and some mid cap stocks as well. But a lot of people, they look at small cap stocks. Small cap means small stocks who have a low market capitalization. A lot of investors try to invest in small cap stocks because they're like, you know what, the price of this stock is only 50 rupees. One day it'll reach 500 rupees. I'll make 10 times my money. That's what a lot of people think, right? But for a stock from 50 rupees to reach 500 rupees, when it's not an established stock, it is fighting many hurdles on the way, right? But a stock which is already very big, right, and is growing consistently year on year with a certain growth percentage, that is more safer for you. Okay, so for a new investor, I would suggest stick to large cap and mid cap. Do not go for that quick money kind of thing on small cap. Okay, avoid high volatility stocks. Okay, high volatility stocks matlab stocks that are hitting upper circuit, lower circuit, upper circuit, lower circuit. Okay, a lot of new investors do this. Okay, avoid that. Avoid penny stocks. A lot of new investors invest in penny stocks. What are penny stocks? Penny stocks are these stocks like 1 rupee, 2 rupee, 3 rupee, 4 rupee stocks, right? And you will be like, I'll invest in 1 rupee and it'll become 2 rupees. I already have doubled my money. And you will see, if you go to YouTube, you might see a lot of videos telling the 5 top penny stocks of the year. And, you'll see a lot of comments in different, websites saying that you should buy this penny stock. Never buy anything in the stock market without doing your own research. Just think about it from a different perspective. If making money was so easy, everyone would have done it, right? That means it is not that easy. Whenever easy money is coming to you, think twice. How is this even possible? Okay, never fall for that trap. So don't get into that quick, kind of a thing. Now, whenever you're investing in the stock market with your own knowledge, you have to learn a little bit about the stock market. You have to learn about the stock itself, how to do fundamental analysis of a stock, how to understand ratios, how to see the sales growth. You have to check not only this year's company's performance, you have to check last 5 years' company performance, right? You need to start reading news articles about the company. Don't take everything at face value, but you start reading about the company, understand what the company does. Go to their website. There's something called investor presentation. It's a beautiful PPT that companies makes where you can actually go inside and read about the company. So download the investor presentation and start reading. Okay, if you have more time and you want to become smarter, right, start reading a company's annual report. Every year they put out an annual report. So you can start reading that. Ideally, if you're new in the stock market and if you want to learn and you have this thing that, I want to become an expert, pick one sector. Okay, focus on one sector and then start reading up on that sector. I just find all the stocks in that sector and start reading up. Okay, this stock is like this. Oh, I didn't even know this existed in this market. You see how much knowledge you'll get. And trust me when I tell you this, in the stock market, knowledge is more important than investing. Okay, if you have knowledge, you know how to make money in the stock market. Okay, but run behind knowledge, not behind quick listing gains and quick money from IPOs and stuff like that. Okay, so learn and understand how to evaluate stocks, learn and understand how to evaluate a particular industry, and figure out what can be the next big thing in the next 5 years. Try to analyze and connect the dots between trends. Finance is a worldwide web. Okay, something that happens in US will affect India as well. So don't just be stuck to Indian news. Learn to read everything online. Okay, something changes in US, some Fed rate hike changes in US, Indian market might go up and down. So everything's connected. Okay, now now you've understood. If you're a new investor and you want to invest in your own stock, you can figure out these things. You have to learn. There's no shortcut to it. You have to learn. But before you learn, you can start investing in large cap stocks, mutual funds, ETFs, up to you. Okay, now a very basic question a lot of people ask. Okay, when do we sell the stock? Okay, when is the right time to exit? Okay, everyone says, okay, this is the right time to entry. You invested in a stock and you're keeping it for a long time, but when is the right time to exit? And this is a very, very, very common question that a lot of people have. And in fact, a lot of new investors, as soon as they see their portfolio up 35%, they're so happy that it's up 35% that they will take out the money. Okay, most of you all do that. Now, I'll tell you when to sell the stock. Firstly, if your investment horizon of saving was for 10 years, do not even touch it for 10 years. If it's up 35%, good for you, right? Imagine after 10 years, it would be up by 350% maybe, right? So do not exit unnecessarily, okay? Now, if you think that, it's gone up too much and I want to take out the profits and maybe invest in something else or rebalance my portfolio, right? Obviously, if you have 10 stocks and one stock is done really well, that stock will take up the majority of your portfolio. So you can rebalance it. You can remove a little bit, put it in the other thing and keep that same, perspective there, okay? But don't remove it. Don't remove it to go spend somewhere. Okay, I've seen a lot of people getting 35%, 40% gain. They're like, chalo, time to enjoy, party time, right? Don't do that. Okay, don't sell, okay, until two things happen. Okay, either you desperately need the money for some emergency, that is why you have saved. Okay, that saving is for an emergency or for a particular goal, right? If either of that one thing happens, you can remove. Because you're like, I saved for 10 years for this exact purpose and I'm removing it right now. If there is no emergency, don't touch it. Let it go. Let it keep compounding for you. Let it grow for you. Let that money keep growing over time. Okay. But the second reason why would you sell? If the company's fundamentals that you have chosen, okay, I've chosen this damn good company, Shashank, it's amazing. But suddenly in that company, fundamentally something goes wrong. Okay, really wrong, fundamentally. Okay, their whole business plan is changed and it's just going into a bad track, or the sales have dipped. Not a small dip. If one sales have dipped in a small period because of some sentimental news, doesn't matter, because the fundamentals of the company need to be strong. Suddenly 2-3 plants have shut down. That is when you exit. And you'll be like, okay, I need to find one more now. Okay, this is gone from my portfolio out of the stocks that I chose. Fundamentally, this stock has gotten bad. Let me find another stock. It is very difficult for a stock to be fundamentally good for 30 years. Think about it, right? So it might go wrong. So until that, don't remove. Okay. The main reason, keep thinking, the main reason you've invested in a stock is for long-term gains, right? So that over 10 years, 20 years, 30 years, and you all see these infographics online, right? You see these images where it said, if you had invested in ITC 25 years ago, this would have been your net worth, and you'll be like, wow, that is so good. But how many of you all can actually keep and hold it for 20 years, right? I agree, that is when the gains actually come, if you keep it for a long period of time. But it is very difficult for us to see it and keep it for 20 years and go through that time. That discipline, not many people can do. And the people who do it obviously end up making good long-term wealth gain. Okay. So do not sell the stock until you really need the money. Okay. Or until you feel that fundamentally something has gone wrong. Okay. That's when you sell the stock. Or else, if you don't need the money, what is the point of removing it and spending it somewhere? Rather, let it be and grow. You spend with the remaining 80% of your income, 20% you save. Remaining 80% of your income to enjoy life is more than enough. Okay, cool. Now, last step number 6, and this is the most crucial step in my opinion for young new beginners, is that once you've learned all this, don't stop. Okay, the step number 6 for me is keep investing. Continue investing. Okay, whether you want to do an SIP, whether you want to manually invest every month, whether you want to invest little this month, maybe more next month, does not matter. But continue this discipline of investing month on month, time on time, and wait for that perfect time. You will see. Don't expect investing every month and you'll be like, shit, it's been 3 months, I've not got much gains, only 6%, only 7%. It takes time, boss. It takes a lot of time for you to make a lot of money in the stock market. But what you're not understanding, if you keep looking at 6-7%, your corpus is building. Every month I'm investing 10,000, assume, or every month I'm even investing 5,000. Right? There's no minimum investment to start. Even if you start with 100 rupees, it is considered investment. It is good. Start saving from day one. Make that habit. Don't think about how much I'm saving. Make the habit of saving. Okay. Every month on this day, particular day, I start saving 10,000, 10,000, 10,000 every month. In a year becomes 1,20,000. That same amount in 5 years becomes almost 6 lakhs, which is insane. Okay. No, yeah, 6 lakhs. It becomes 6 lakhs in 5 years. So keep saving. Keep saving. Even if it's 5,000 or 10,000 a month, does not matter. Just keep saving constantly. Okay. So that is my most important thing. Now, apart from these 6 steps for new people to invest, I'm going to put 2 additional things for you guys. This is like a bonus kind of a thing, which again, you guys know, but I will tell you what it is. Okay. For all the new people out there, it is very crucial and very important for you to understand the pulse of the market. Okay. What is the pulse of the market? Pulse of the market means you should at least know what is happening in the stock market. Okay, now how do you do that? Okay, how do I know what's happening in the stock market? Very simple. Okay, you need to start reading news articles, news websites. You can download all the news articles and websites, Economic Times, Live Mint. There are so many other websites online. Just start reading about the market. Understand the pulse of the market. Okay, that is very important. That is very crucial. Understand the pulse of the market. Okay, once you understand that, you will know how the market is reacting, and that will help you make better decisions, and you will start gaining a lot of knowledge. The second thing is start learning. Okay, educationally start learning what are the different type of ratios. What is ROE? What is ROCE? Right? How is PAT growth good? How is sales growth good? What is EBITDA? What is EBITDA margin? There's so many things, right? Now, I'm not saying learn each and everything, but learn what is important, learn what is crucial, because at the end of the day, you're learning for yourself. That knowledge over here builds, and if this knowledge builds, you know how to apply that knowledge in the market, and that will eventually get you your return. So every time you start spending on yourself to learn something, don't feel sad, because it will definitely one day pay its returns back to you. Got it? So don't worry about that. So just to summarize the 6 steps again for you guys. The first thing obviously is to open a demat account. Okay. Before putting any money, first understand your investment horizon, what are you investing for, and start setting a budget aside. Ki Shashank, every month I will do this. This much I'm going to invest. Set it for yourself. Don't set it for Shashank. Set it for yourself. Okay. Third thing, find out the 3 ways to invest, right? The 3 different type of investments are: you either do it by yourself, self-invest in stocks, okay, or you put in mutual funds and don't worry about it, just put an SIP and just keep doing that, or you invest in index funds or ETFs, okay? That is number 3. Now, if you're doing it, step number 4, if you're doing it by yourself, then you should understand how to do it. First, diversification is very important. Invest in businesses that you understand. Stay away from these penny stocks, volatile stocks and stuff like that, okay? And try to invest in large cap and mid cap. Don't try to go for those quick small cap listing gains, okay? So do that. And step number 5 for new people is how to sell and when to sell a stock. I told you, only sell it if you really need it or your investment goal has achieved. Okay, you've reached an investment goal where I have to send my parents for a vacation. Then withdraw it without any care and send them off. And then make a new budget again and start saving again from scratch. Okay, do not stop there. You have to have a backup. And last but not the least, the most important point, continue the discipline, keep investing, have that discipline. And only when you have this financial discipline, trust me, take any compounding calculator out or just take any calculator out. Put the worst case interest rate that you might think I can get. Okay, even if you say 10% growth year on year, put whatever amount you want, okay, and multiply that until the next 30 years of your life or even 25 years or even 20 years of your life. You see how much money will be left in that thing, corpus. It's simple math, okay, but you have to have the discipline to do this. Apart from that, learn as much as possible about the market. There's a lot of videos on Grow itself that teach you a different type of the market ratios and stuff like that. Also, Grow keeps putting out news articles every time. It talks about what's happening in the PSU segment, okay? What is this new sector Ambani is getting into? So start reading all this. These are quick short videos that Grow keeps putting out, so you can start reading and gain this knowledge. Now, in today's date, knowledge is available for free everywhere. Just try to take as much as possible and start reading some news articles as well, okay? So yeah, that is what this was. I hope you liked it. I hope you learned something as well from this video for all the beginners. And don't stress, don't worry. It is not that difficult to invest in the stock market as you think it would be. If you think I have missed out any step or you think, Shashank, can you please explain something more in detail? Please leave it in the comments below. I will come and start teaching you all the other things as well. Okay? And if you like the video and if you like what I said, like and subscribe because I look at the likes and subscribe, so I get happy with that. But cool, yeah, that's it. So put your comment below if you think, Shashank, can you please explain this? You know, we are new investors, we want to understand how this works, how that works, maybe how IPO works. Let me know in the comments and I'll come and teach you that as well. All the videos that are made on the Grow channel, including this one, okay, is only for educational purposes. We do not recommend any buy or sell for a stock in this video, okay? So this is only for educational, no intent to buy or sell any stock recommendations.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.